Our next guest says Hurricane Milton may change the insurance market. Piper Sandler's Paul Newsome joins us now. What do you mean? What are you expecting, Paul?
You know, you really don't know, but usually pricing is the first thing to increase, but also what happens, what's get covered, terms and conditions will change, as well as the very structure of how reinsurance is spreads the risk around the world could very well change with an event that potentially we've never seen before. So you could have a very large structural change in the insurance industry that frankly will be on a global basis if it's big enough, because that's what the industry does. It absorbs losses, and it does it on a global basis.
So you're saying just the sheer magnitude of this storm, because the region is no stranger to hurricanes lately?
You know, there are these sort of hypothetical losses. Tampa on a Cat 5 is one of them, where we really just don't have any idea how big the damage could be. And that would test how much reinsurance companies buy, how much insurance people buy. All of those things could have to be readjusted if we think just the sheer size of the risk is larger than we had originally conceived.
We're looking at some of the names of insurance companies that operate in Florida. I'm wondering who in your coverage area is most exposed.
Well, I cover a couple of the Florida specialists like Universal and Heritage. They are the most vulnerable. They buy a lot of reinsurance to cover themselves, but they're theoretically the most vulnerable. And then the bigger companies obviously also will take large losses too, but usually in Florida their market share is relatively small. But it'll be a big event for everybody. It'll get spread over companies you didn't expect through reinsurance, assumed reinsurance, and Lloyd's of London exposures.
Paul, is it a surprise to you over these last many years at this point, with climate change and what do seem to be much more powerful storms as a result, that the insurer stocks have actually performed as well as they have?
You know, this is at the end of the day a cost plus business, and more risk means the business has to grow with that. And so over the long term, more risk actually increases the size of the industry. And I think that's why the industry has done relatively well over time, because at the end of the day, there's more demand for what they provide and more need for what they provide.
Hey, finally, Paul, you know, everyone has been talking about how political FEMA funding has become. It's difficult to get Congress to come back and pass more appropriations. FT's got this opinion piece that the Fed should start a disaster recovery bond facility that would be exempt from federal tax, issuable upon declaration of a state emergency. As they point out in the headline, why help only when bankers are in trouble? I wonder if you think that's the direction we're headed.
I think I don't know if that's exactly what will happen, but there's a lot of history here with states and the federal government not wanting the insurance industry to go away. And you can look back at what the state of Florida has done over both recent years and the past, as well as other states. Governments will step in to make sure that the insurers are there in the long term, because it's the grease that kind of makes the economy works. So I don't know if that will be the same thing, but think about what happened after the World Trade Center disaster with the TRIA exposures. Usually there's some response that keeps the business going.
Paul, on that note, though, the expectation seems to be that insurers will continue to either price themselves out of the Florida market or simply choose to actually exit. Is that your expectation as well?
I think if the event is truly unique and truly larger than we contemplated, you'll see other mechanisms, whether it be, further tort reform, changes in terms and conditions, or things of that nature that aren't necessarily just continuing to raise prices. There are a lot of prices increases in Florida, and it's clearly become an issue for the average person. So my guess is that both the insurers and the regulators will work hard to try to figure out how to not just make it about raising rates after the hurricane.